You might hear people say invest in VOO or SPY. Why do they say that? Well, because it holds the top 500 public companies in the US. Let's check out their revenue. In 2020, they was bringing in 4.8 billion. Now they're bringing in 7 billion, almost double. Net margin is great, it's 20%. It's going to continue to grow. Debt to equity is low, that's great. Dividend yield, every time it becomes oversold at that 200 EMA, it takes off, or should I say a demand area, because now it's at this demand area and it's oversold. Sure, this is what they're paying out per share. Look, United States is that big boy. Hey, let's check out their earnings. Man, they had great earnings, I ain't gonna lie. So for them to be undervalued with great earnings, this is all we need to know. Look, they below fair value right now. Up here is some things that could cause share buybacks or repurchases to be negative. Man, what's up YouTube, man? I'm glad to be back. Why am I glad to be back to YouTube? Well, because you know how the rich get richer every day, the poor get richer every day as well. We're gonna keep grinding, we're gonna keep studying every day and locking in and continuously grow our net worth every day. Today, what I got for y'all is some great stock picks. I got one technology software company and I have another technology company that will definitely do great things. Why do I believe they'll do great things? Well, first thing first, Simply Wall Street agrees with my analysis. We're gonna go over what Simply Wall Street believe these two stocks could do. ACN, you see what it does, but look at the rewards trading at 9.2% below their fair value. They're definitely undervalued technically, and I will show you why. Earnings are forecast to definitely grow and pays a reliable dividend. It's a good company. Why will ROP grow? Check out their software in the industry they're in. Why? They're trading at 27% below the fair value. Earnings are forecast to grow over 12%. You know what I'm saying? Good value company. And analysts are good in good agreement that this stock could rise. Even I believe the analysts, and I will show you why. But check this out, man. Good dividends, their value, good health, decent pass. They have a future. Good health, good pass, definitely great value right now. We're going to check out why. First thing first, let's check out the SPX and why the SPX is so great and such a great investment. You might hear people say invest in VOO or SPY. Why do they say that? Well, because it holds the top 500 public companies in the US. And as we can tell, despite the president inauguration, retarded inflation, the pandemic, trade tensions, global financial crisis.com crash, the stock market has always recovered since. How much has it recovered from let's do the top of the dot-com crash, because we all can't time the bottom of the market. It has still grown over 351%. Oh my God. And stocks have been doing the same thing. But let's get straight into it, man. ROP, why do I like ROP? Well, first thing first, I already got some things circled, but we're going to erase everything. So starting with a clean slate, why do I like ROP? Well, first thing first, when I was analyzing ROP, I was like, wow, this is a company that always holds the 200 EMA. The only time they didn't hold the 200 EMA was in 2008 during the global financial crisis. But ever since then, you see what happens. Not only that, you see what happens once it becomes oversold on the RSI. You feel me? Nothing is 100% guaranteed. That's why we could see it below the 200 EMA as of right now. But check out this RSI. Did it get below? It really didn't get below a 20 RSI on a weekly time frame, huh? It really hasn't. It's really low at that undervalued level on the RSI as well. Now, it's also at a great support area, But let's keep zooming in and checking it out. Let's go. It beat earnings, it did great on earnings, but it gapped down. And what do we know about gaps? Well, gaps fill. Not only did they gap down on earnings, they beat earnings, but they missed revenue a little bit. But their revenue and earnings in the company as a whole is definitely continuously growing, and they're definitely undervalued right now. Let's check out their earnings. Their earnings is consistently growing over time despite the years throughout the past. Let's check out their revenue. In 2020, they was bringing in 4.8 billion. Now they're bringing in 7 billion, almost double. Their net margin has increased as well. Net margin sitting at 22%. It's up from 17%, 4 years ago. Let's check them out on a quarterly basis. Let's see their balance sheet. They're consistently investing into the company. Look at how them assets are growing. Cash flow, the operating cash flow is steady increasing because they're steadily increasing their sales and they're doing great things as a company. Let's keep checking them out. Let's check out their revenue, man. What do their main sources of revenue come from? Well, let's check it out. Here we go, right here. It's broken down here. Application software is the main thing. Technology related products, boom. Check out the growth in these sectors, man. Check out the growth. This is broken down by country. What countries are helping their revenue grow? First thing first is United States. That's great. We always gonna need United States because we see how the economy going to the point where United States is only dealing with United States, possibly, you feel me? But look, definitely blowing out the water for the American United States revenue. So RP fundamental ratios, I'm gonna put the definitions on the screen so it can help y'all learn as well. But what make RP great fundamentally and financially? We're gonna go over that right now. Well, boom, 29 on the RSI on a weekly time frame. The higher the time frame, the safer it is. And if it's on the monthly time frame and it's oversold, that's even better. The higher time frame, the better. Net margin is great. It's 20%. It's going to continue to grow. Debt to equity is low. That's great. Dividend yield, we're not looking at this company as a dividend investment, so it's cool. Free cash flow is green. That is great. Return on equity is profitable. And yeah, look, continuously increasing their dividend. You feel me? Let's go over their earnings real fast. This is ROP earnings. Why is ROP so great? Well, first thing first, they had a strong third quarter. Their revenue grew by 14%. Earnings before interest, tax, and deductions grew by 13%. Free cash flow is up 17%. Accelerated AI innovation, 3 billion share repurchase authorization. Look, just read everything. Just check out these perks of a great company that's undervalued. See, this is the thing. When it's a great company doing great things and they're undervalued, the stock price is going to catch back up with all their great financial reports and everything. But check this out, man. It's something for y'all to read for yourself, but I'm gonna just keep scrolling through so we can see the great things and how AI is continuously expanding companies. Like, I don't believe AI is in a bubble because AI is consistently expanding companies and it is going to only bring in more revenue. You feel me? Like right now, a lot of people looking at AI like, oh, AI ain't bringing in enough revenue, but hey, a lot of these companies are undervalued. And by the time you see AI bringing in revenue, all the companies that's undervalued, they're gonna be gone. Cause I'm already on Fundrise. Check out the link in the bio. I'm already on Fundrise investing heavy into AI. So once it do take off with their innovation fund, once it do take off, hey, I'm gonna be a poor man getting richer every day, man, you feel me? But let's go over the next stock I got, which is Accenture, because we're on great timing right now. It's only under 8-9 minutes. Why do I like Accenture? Well, first thing first, I need to delete all these drawings so we can start at a clean slate. Why do I like Accenture? Well, the same thing, similar. They only broke the 200 EMA back during the great financial crisis, which they are breaking it a lot now, which is cool that they're breaking it a lot now. There's no worries. But the fact that they're breaking it a lot now, they're also at another demand area that has started in 2020, been holding up for the past 5 years. But not only that, they're oversold on a weekly time frame. They're consistently beating earnings and they're consistently growing as a business. Let's continue to check them out. They're holding this low as well. A lot of wicks at the bottom, a lot of days it was holding this area down here. And it's oversold on a higher time frame. Let's check out the RSI in the past and how the RSI helped predict price movement for the future. So when it was oversold here, I mean, we could see what happened. When it was oversold here, we see what happened. We see what happened. We see what happened. Every time it becomes oversold at that 200 EMA, it takes off, or should I say a demand area, because now it's at this demand area and it's oversold and it's holding. But let's go over Accenture as a company and as a business, and let's see, why do I believe they're going to keep going? Well, as you can tell, they're consistently beating their earnings, man. I love that for a company. Not only that, they're consistently increasing their revenue. Back in 2021, their revenue was what, 50.5 billion. 2025, it's in that 70 billion right now. So, I mean, that's already great. Look at their assets. They're continuously investing into the company. We're going to keep checking that out. And look at that operating cash flow. It's steadily going up. It's going bonkers. So let's go over their revenue and let's go over more things. Let's go over their dividends as well. Let's check out their dividends. Dividends per share. This is what they're paying out per share. This is what you will make on a yearly basis. So if you was to invest $100, you'll be making $2.37 a year off of that 100. UPS is my favorite dividend stock. Their dividend yield is 7.9%, so that's pretty high. That means every $100 you're gonna make $7.90 basically. But look at that dividend growth is doing great. They paying their cheese for that dividend. That means they're consistently profitable to be able to pay a dividend. So yeah, that lets you know they're a good business right there. Look at that revenue growth. It's estimated to grow. Their profits per share is estimated to grow, and they have been consistently beating earnings. I don't know about consistently being revenues, but from 2024 to 25, they have been doing that. Let's check out their revenues. What do they top revenue actually come from? Well, their products, then health and public services, financial services, things of that nature. Let's check it out. Look, it's just been going bonkers, man. Just over double, over quadruple, all of that stuff, you know. By the country, look, United States is that big boy. Then we got Europe coming in next, and Asia and other countries. But oh yeah, got big money flowing into them. Let's see what's next. Fundamental ratios. Why is ACN fundamentally a great company? Well, let's go over that now. Net margin is above 10%. That's great. That the equity is low. That's great. Dividend yield. Hey, you feel me? Look, dividend yield is cool. Free cash flow is great. Return on equity is profitable. Current ratio is great. Okay, let's check out their earnings. Man, they had great earnings, I ain't gonna lie. So for them to be undervalued with great earnings, this all we need to know. Look, they below fair value right now. But look, check this out. They met or beat all elements of our original guidance for the year. Check this out, man. Revenue growth 7%. EPS grew 8% year-over-year growth. Bookings greater than 100 million. More than 60% of revenue driven by the top 10 ecosystem partners, reflecting 9% growth in local currency. So a lot of great things. 3.3 billion in acquisitions and research and development. That's great, man. Leading in Gen AI, nearly doubling our bookings to 6 billion. That's great. Strong free cash flow, up 26% year-over-year. It's just a great company. This is just what I went over, all the great stuff for both of these companies, honestly. But yeah, check this out for yourself. 4% organic growth, man. 10% basis point growth for operating margin. This is their outlook for fiscal year 2026. Growth is a little slower. You know what I'm saying? Let's check this out. $5 billion approved for the board and the authorization to plan to increase share repurchase. So they're both buying a lot of their shares back and plan to increase dividend by 10%. Their dividend is already doing good, and they finna keep that going up. They're leading ecosystem partners, you feel me? I use a lot of these. But yeah, we're going over this. Share buyback advantages. The theory behind share buybacks is that they reduce the number of shares available in the market, and all else being equals, increase the EPS on the remaining shares, rewarding shareholders. Bumping the EPS can be tempting for companies flush with cash, and this is going to make them more bullish. Up here are some things that could cause share buybacks or repurchases to be negative, because some people might look at it as a negative thing. But yeah, hey, look, insider enrichment, market manipulation, wealth inequality, economic efficiency. Like some people believe they could just invest the money just straight to dividends or back into the business instead of repurchasing shares, But these are two great companies that are undervalued technically and fundamentally. And hey, if y'all want to increase your net worth and become poor to rich, hey, start investing. Appreciate y'all for checking it out. I got more videos dropping. I'm hungry to drop videos. This never stopping.